Just a quick update this week since the 4th of July holiday closed the market on Thursday. Like I mentioned last week, the PCE number on Friday was a good one. Showed inflation slowing to its lowest level in over 3 years, and that should help the Fed with their decision to finally cut interest rates later this year. The Atlanta Fed's GDP forecast dropped significantly, just one of many signs that show we might be in a recession. And helping that were more signs of a slowing labor market. And as an added bonus, Jerome Powell finally said something about shelter costs, which have basically been artificially keeping inflation higher. And we've talked about that for almost a year now. So, as we know, inflation readings likely won't be enough to get the Fed to cut, but we've been hoping to see weakness in the labor market. And the ADP report did show fewer job gains than expected. Initial jobless claims were up a bit, and continuing claims continue to rise, which basically shows it's harder to get a new job if you lose yours. The job market does seem to be slowing, which we've been praying for. The BLS report's really the big one, and most importantly there we saw unemployment get a little over 4%. Just to get a little technical here, there's something called the SOM rule, and basically if the 3-month unemployment rate rises 0.5% above the last 12-month low, it almost guarantees a recession, which we very well could be in right now. Next week, I'm going to be back with inflation news for both consumers and the wholesale numbers. But have a great long weekend if you're taking a day off, and we'll see you next week.